So as a former lender myself, I've been in real estate for 36 years. My first 15 was as a lender. I know the importance and I know the difference between somebody who's licensed to do loans and somebody who knows what they're doing. I came across Chandler Robbins from I gotta get the name, House American Financial. My transaction recently, he did a fantastic job. And it wasn't an accident. There's a couple of strategic decisions he made. I want to share that with you guys today. Chandler, thanks for joining us today.
Thank you. Thanks for having me.
Hey, give me a little background. How did you end up being a mortgage lender? What did you do when you were a kid? Were you playing with Ken dolls and decided one day I want to be a mortgage broker? Or how'd that work out?
No, not quite. Actually, my first job was as a loan originator's assistant. So I was helping him. I was like 15 and a half and I could barely drive my stick shift car over to his office and get in there. And I was filling out loan applications and it was the most boring thing that I'd ever done. I mean, I was like, I'm never going to do this. So I worked there for like 6 months and then I went to college. In college, didn't do anything around mortgage, nothing like that. And I was living in Chicago at the time. Then COVID came around and I had to move back here. And I'm originally from California. And so my mom is in the real estate industry as well. So she knew a lender. The lender was like, hey, I need someone to fill this position. And I thought I would do it for 6 months until I found my next gig. But I actually fell in love with it. And I love a lot of the parts of lending, including the fact that I can be my own boss. I can be as creative as I want to be, but I can also be super analytical. So it's good.
So it started out as I need a warm body, and here you are now as a professional making good money at it.
Yeah, it's great.
Give me a little overview on House America Financial. What about the company? I know you and I talked about previously, but give me a kind of a high-level overview who the company is and why you're with them.
Yeah, so House America Financial, we're a direct lender. We're not a bank. All we do is loans. We only do mortgage loans. And we have the flexibility to do a lot of things. We can lend our own money similar to how a bank would, so we can kind of follow our own rules. But then if there's something outside of our credit box or what we would consider something in our wheelhouse, we can take the loan out and broker it to Rocket Mortgage or do a 12-month bank statement loan, or other types of loans too. So we have the flexibility to do whatever we want, which is nice. We have our own in-house marketing. We help realtors with marketing as well. And we have a pretty big presence here in the San Fernando Valley, Glendale, Pasadena, this area.
And that's exactly, we go back to the flexibility. That's exactly what caught my eye on our transaction from the very beginning. I was a listing agent and I don't really deal with the customer, but I do pre-qualify the offers that come in. And you'd make clear that you wanted to take this loan to a particular lender because the condo requirements that they didn't have, they were different. I think it had something to do with first-time buyer or first-time buyer program and the definition of it. And while most companies qualified that way, this other company didn't. Give me a little overview of what that was, because that worked out to be a lifesaver for us.
Yeah, so this particular client, I've been working with him since January. So it was like 6 months worth of work and we've been looking for houses. We got into escrow. And so he previously owned a home. And in many cases that would preclude you from taking advantage of first-time home buyer benefits. You cannot put 3% down, for example, if you're not a first-time home buyer. So you can do 3% down only if you're a first-time home buyer. But he owned a home in the last 3 years. And so we got declined originally because of that fact. Now, we went back to the drawing board and I looked really in depth at the guidelines and I found the definition of that Fannie Mae put out of a first-time home buyer. And the first-time home buyer is someone who has not owned a home in the last 3 years, except if you are now a single parent. So didn't know that before. And I would say most people don't know that, but that's how it is. So we went back to do the loan here in-house. And what ended up happening was everything was going fine. The condo association at the time that we were trying to purchase a property, they recently switched insurance carriers from basically like a really good insurance carrier to cut rate insurance. And they had $5 million of coverage for 180 units. It was not nearly enough coverage. So we had to decline the loan last minute because the condo association switched up insurance like that because they were actually out of code, which all came up at the end and it was a nightmare. So
That was on the prior
Then,
transaction of mine. That was, you're working with this buyer,
correct.
you had another escrow, and the HOA, to save money, got cut rate insurance, and that kind of killed the escrow for that particular buyer. But meanwhile, you had the buyer ready to go.
Yeah, absolutely. And so this was now going to be our third time to go after, a property. And we got our offer, in with Bill. And I explained to Bill, and it was explained to you. I mean, it was great. That the reason we had fallen out of escrow previously was because, at no fault of the buyer, the first lender didn't agree with our assessment of what a first-time home buyer was. So that was why the first one fell. Second one fell because the cut rate homeowners insurance. So there was no fault of the buyer here, and that is what I explained to you. And so we ended up going to Rocket Mortgage, and I called previously to Rocket. They have a desk where you can call and ask them for scenario help, right? And so I asked them, hey, would you honor this definition of a first-time home buyer? And they said, yes, absolutely. So that's why we put it through with them.
So you got the buyer definition confirmed with Rocket. Meanwhile, being a good listing agent, I had the insurance ahead of time. We reviewed that. It was standard Fannie Mae guideline insurance, so we knew we were good to go. And next thing you know, we have, I think this is like the first escrow in about 20 years that actually closed on time. I think it was a day or two after, but really to me, it was basically on time because we'd done the work ahead of time. And I think as a listing agent, and I try to explain this to sellers, there's no substitute for a motivated buyer, right? This guy had been close twice and was like salivating to get in. And the prices aren't going down. They're probably going up slowly, but they're going up. And so to me, it was music to my ears that he'd been turned down twice for other reasons. If we could solve those problems, let's get that done.
Absolutely.
So give me a little, that's a little beyond the average loan officer. Most loan officers, if you ask them the definition, they wouldn't even begin to tell you that distinction. Most of them don't even know there's HOA insurance requirements. They send it to some department who tells them what to do. How did you get the discipline or the skill to plan ahead of these things or look ahead of time?
Yeah, good question. So I was an assistant for about 2 years under our top producing loan officer here. And so he did, I think in 2021, about 170 million in volume. And what that did was give me a lot of experience very quickly in how do we actually do the loan, right? And here at our company, we're not a huge company. I mean, I think we're 30 employees. And so each employee wears a lot of hats. Specifically, the assistants would have to take care of all of the insurance requirements. They'd have to take care of all of the condo documents. And what we pride ourselves on, especially here as loan officers, is we act as an underwriter ourselves. Like if we do a pre-approval, we know that it's ironclad because we think like an underwriter does. And so we ask the question, would this be acceptable? And it goes far beyond just looking at pay stubs. Like we have to make sure that everything is in line before we even send it to underwriting. And that's one of our key strengths. We rarely have people fall out. And so that's why this was a very special case to me, is that I told this person that they were good and I had to make it right. So I would say your normal run-of-the-mill bank loan officer at one of the big banks, they probably don't go that in depth. And that's just not their business model. And that's not how their business is set up. So for us, we empower our loan officers to look into these things and make sure that the file's clean from top to bottom before we send it in.
When I got married 36 years ago, I didn't really pay much attention to marital advice, but I later saw the video of it and thought, well, that's an interesting concept, but it applies to business. And the rabbi said at the time, the key to success in marriage, and I think it's in all partnerships, isn't finding the right partner, it's being the right partner. And I think with lending, it's not about finding the right realtor. I think a lot of loan officers spend a lot of time marketing to and looking for the right realtor, and realtors looking for the right lender, but it's really being the right partner. And what you're really talking about, to my mind, is how I did business. When I was a lender in the old days before you had online guidelines, you had a book, the FHA 4155. Oh, wow. And when people say to me, and I was a very successful agent, I used to speak at events, and they'd say, well, how did you, get good at that? I read the book. I took a pen out and made notes, and anything I understand, I walked in and asked our underwriter until I understood it. That's how I did FHA loans. Then I went to Fannie Mae, did that from there. And I think that what you're pointing out is really an old school skill that got lost with all the technology and the decline in rates and all the refinances, that at the end of the day, the job of the mortgage originator is to be able to originate a loan and know it's going to go. And as a real estate salesperson, I want to know if you can finance it, great. If you can't, just tell me and get your stuff ready and come back next time when you're ready to go. So congratulations. Now, the hard part is, and I'm sure the frustrating part is, you're good. How do you convince other people that you're good so that they'll choose to work with you and do business with you?
Mm-hmm.
So what do you do? What does your business model look like? Or do you just have enough, hopefully I'm an example of it. People are happy with you and bring you appreciation, bring you love, and bring you referrals. Is that how it works? Or do you actively build your business?
I actively build my business. So, I mean, I have quite a few escrows at the moment. It wasn't always this way. And the number one thing is I have to market myself. And the way that I go about doing that is just being of maximum service that I possibly can. So I let everybody know that I'm open to helping them with anything. And so there's been multiple situations where I've helped somebody almost complete an entire loan and I didn't do that particular loan. Like someone is working with another lender and I'm just double checking their work and making sure that they're good, or I answer questions at any time, like 9 p.m. at night, you want your question answered. So like being extremely available and knowledgeable is the way that people understand, okay, this guy knows what he's doing. I don't have to go and say like, oh, let me double check that and get back to you like 2 days later. I study the guidelines, I know the process, and that comes off when I talk to people. And so they give me a shot and then I wow them and then we do more business together.
It came off right away when I talked to you, and on that property, I'm sure I had 2 or 3 other, buyers and other lenders, and some of them I can't even get on the phone, and other ones I talked to, and I understand why they don't want to answer my phone call. They don't know what they're talking about. And I talked to somebody who knows what he's talking about, and it's a whole different experience. And I want to do everything I can to work with those. In fact, I just got into another escrow on another buyer deal where, there's a lender who was good and there's one who was just lost. And I just said to the realtor, I'm sorry, but, and he knew it. And he knew he couldn't shake that borrower from that lender. And I said, just make sure he knows we're not putting him in escrow because of that lender. It's just too critical of a relationship to, in this case, to go through. So you've really distinguished yourself. Chandler, I really appreciate working with you, and I appreciate the great job you did and hope to continue to work with you. If somebody wanted to talk to you about either a particular customer or problem, or just want a general one to work with you, what's the best way to get in touch with you?
So you can reach me on my cell at any time. My cell is 818-919-1457. And then I'm very, very active on social media. So if you want to find me, it's @_Chandler Robbins on Instagram, Facebook. And then if you wanted to check us out at houseamericafinancial.com.
Fantastic. Chandler, appreciate your time today. Thank you so much. Appreciate the success we had on that one transaction. Look forward to doing more with you and with our team.
You too. Thank you so much, Bill.